Ladies and gentlemen, welcome back to another lesson of Trader Boot Camp, and today we are going to break down my favorite tool known in the stock market, moving averages. Moving averages have changed my life. Moving averages are so underrated. Most traders have moving averages on their chart, but are unaware of the underlying principles and concepts that moving averages actually represent. Therefore, they are missing out on a massive tool. Moving averages have changed the game for me. If you guys watch my videos in the past, you know moving averages are they play a vital role in my strategy. And every single decision I make on the market is affected by the moving averages, right? So today in this video, we are going to break down what are moving averages, right? We're going to break down the underlying, what they are, what are they representing. We're going to break down what purpose they actually serve, because that's extremely important. You got to understand what the moving average is, what does it represent, and how does it serve you, right? As a day trader, as what are your goals if you're trying to obtain consistent profitability? How does this tool serve you? I'm going to break down something that has changed the game for me. You guys have probably heard me talk about it before, and today we're going to dive very deep into it. The healthy versus the unhealthy trend. If you can learn to understand this concept I'm going to package and give you, you will never view the market in the same manner. All right? And then all together, how does all this information serve us to obtain our goals as a consistent, profitable day trader? All right, so what is a moving average? So a moving average is a tool that smooths out price data over a specific time frame to help traders identify the overall trend of a stock or an asset, right? So it's a tool. Just like if you were building a house, we're trying to build consistency. So in the same sense, we need tools, right? But just having a hammer at your job site isn't going to make the house build. Or swinging that hammer backwards is not going to help you build that house. It's the same concept. Most people understand this concept while trying to build something, but not in the spiritual sense, not in the mindful sense, not in the stock market sense, right? So once again, the moving average is a tool that we use to obtain consistent profitability. How do we do that? Well, it's a tool that smooths out price data over a specific time frame, right? And one thing you're going to learn about moving averages and the concepts and principles that I'm about to give you is that it works on all time frames, which is extremely beneficial. Like when we start breaking down the healthy versus unhealthy trend, that concept can be utilized on the 5-minute, the 2-minute, the 1 hour, or the daily. And I will show you how I use that to understand market conditions much better, to avoid bad setups, to avoid chop, etc. Right? So, and it's also a tool that determines patterns between healthy price action and unhealthy price action, right? Once again, learning to understand the difference is going to play a vital role in your confidence, in your consistency in the market. And the most important thing about a moving average is it keeps you objective, right? So there's two types of traders. There's an objective trader and there's a subjective trader. A lot of traders ask me what the difference is, right? Very simple way to understand objective and subjective is predicting versus reacting. Are you trying to predict? Are you guessing where price is headed? Or are you making decisions based off what you're looking at? Those are two very different traders. One of those traders will get consistent results. One of those traders will battle over and over, getting lucky and gambling. Right? So you need to learn to make decisions based off objective information. This means the moving average, the 9 EMA, and the 50 EMA have just crossed, right? That is an objective identification, right? You're objectively identifying the cross. You're viewing it and going, hey, the cross has happened, therefore I am bullish. That is another way we use moving averages. It keeps us grounded in the present moment. See, our mind likes to assume things. It likes to expect things. That's one of our superpowers. But when used incorrectly, it can be our kryptonite. It can crush us. So a moving average is going to help us remain grounded in that present moment and keep us from assuming things. And so this keeps you grounded. It keeps you focused. and it's one of the most important parts of the moving average. It's actually why I started trading with moving averages, because I found myself trying to always sell the top or buy the bottom. And then I realized I'm always trading against trend. If you guys watch my earlier videos, one of my most common and used phrases is the trend is your friend. Trade with the trend. Identify the market conditions and trade with them. See, one of the way we do this is by using moving averages. If I'm below the moving average, I'm looking for shorts. If I'm above it, I'm looking for longs, right? So once again, using that tool to tell me which way I'm trying to trade. Not come up with some prediction or some wild analysis or some, oh, you know, this is going to reverse. I'm going to buy the low. I'm going to guess the low. See, no, we get rid of all that. That's being subjective. So instead, we're trying to become objective and make decisions based off the information that the moving averages are giving us. All right, so what purpose do they serve? So we've gone over the first slide. The first slide states that a moving average basically keeps us objective. It helps us identify healthy and unhealthy trends, and it's a tool that tells us which way price is headed. So what purpose do they serve? And over here I'm going to show you just a very simple chart, right? I'm going to explain some things. We got 2 pit numbers here, 3 actually. We got previous day high, we got previous day low, we have open print, right? So these are pit numbers. These pit numbers come from the previous day, and they hold a lot of volume, right? And then we have price action here ripping up into previous day high. We have price action ripping down into previous day low. So price action has one job. It's to move back and forth between volatile areas, right? Capturing liquidity between the market and balance. This is a principle. This is a concept. This is something you need to understand. Price action's job, its sole purpose, is to grab liquidity. Large money manipulates and moves price. They do this to make money. The way they make money is by capturing all the orders. There's tons of orders. Hold on, let me do this. There's tons of orders up here. There's tons of orders down here. There's tons of orders up here, or right here. So large money is going to always, right, move price from critical level to critical level, then next critical level to next critical level. There's an 88% chance of this happening. This is called a market imbalance, right? So bullish cross, market imbalance, up to previous day high. Bearish cross, market imbalance, down to previous day low. This is how price moves, right? And this is how we look to identify trades. And moving averages are going to help us determine the current market conditions, providing us the opportunity to be a part of this process before it happens, right? So once you understand price action's sole purpose, to grab all that liquidity, to go from critical level to critical level, right? Now we use the moving averages to identify the market conditions, the current market conditions, not the ones you think are going to happen, right? And then we look to capitalize off this and capture the imbalance, therefore successfully getting in and out of the market. All right, so now we've broke down what moving averages are. We break down what they do, their purpose, how we utilize them. We use them through crosses. Another way we utilize moving averages is by identifying healthy and unhealthy trends. So the next 2 slides are going to be solely focused on that concept, right? So the first one is healthy trends. So a healthy trend is a trend that is regular, familiar, and one directional. And just before I go any further, I want to show you guys, I want to break down to you guys how I learned this. So through the last 5 years of day trading, I've collected tons of data. I've logged every single trade that I've ever taken, and I've done deep analysis on why it is some trades work and why some don't. And one of those things I've realized through deep self-critical analysis is that the trends that are orderly, balanced, one directional, they have a relationship with price in the moving average. This relationship is what we call healthy, right? So it's just, I want you guys to think of it just like if you had a relationship with a significant other. What would a healthy relationship look like? One of the number one components to a healthy relationship, and I'm far from a therapist, is communication. You need, I don't care if it's with your girlfriend, boyfriend, mother, father, son, daughter, you need good communication to have a healthy relationship, because you need to be able to speak to one another and work in harmony with one another, right? You almost need to become one. The same is with price action. If you're looking to identify a healthy trend, you need to see a balanced relationship with good communication. This is what that looks like. Notice how price here is hugging the moving average, right? We have the EMA cloud that's being respected. We have the 9D EMA that's hugging price, right? You can see here, even though we get a $3 move to the downside, price never gets super extended from the moving average. This is healthy. We continuously are closing on or around the moving average. This is healthy, right? The moving average is steady, it's close, it's balanced. These are trends we can expect to continue in the dominant direction. Dominant in this case being bearish. You see here, open prints, establish, defended by sellers. The EMA cloud is respected, and the 9D EMA is hugging price. This is extremely important. And notice once we get very extended down here, price rallies back up for the reversal. Now it doesn't show this, but if you were to look at the 1 hour time frame, I would be positive that price was extended from its moving average. So once again, this concept works on all time frames, which is why price will continue and then it will retrace, right? The candlesticks operate with certain principles and they apply on all time frames. The market is constantly just in harmony with these principles. So the more we can understand these principles, the better decisions we're going to make and the more confidence we're going to have in the market. So that's a healthy trend. What's unhealthy? Unhealthy trend are trends that are irregular, unfamiliar, and choppy, right? In the next example, I'm going to show you too how you can use this information to stop trading during chop, stop chasing, stop having FOMO, right? Because knowledge is power. Ignorance is not bliss. Ignorance costs you tons of money in the market. Do not be ignorant. Right, so what do I mean by irregular, unfamiliar, and choppy? Well, they have a relationship with the moving average that is extended, erratic, and unbalanced, right? Look at the extension here. So when price falls here down below open print, we get, what is this? About $1.20 away from the 9D EMA. Well, research shows, data shows, when you get more than 50 cents away from that 9D EMA, there is an extremely high chance of a correction or a reversal back up into it. This is what we call the snapback, right? So notice here, we get super extended, we snap back, and we actually reverse. And then price rallies and does the same thing here, where it actually snaps back into it. So this is unbalanced. This is erratic, right? This is price action that you do not want to get into. Or, like on the slide before, this is price action you want to take profits in, right? Like if I'm in a short play, if I take a short play here off open print, even though there's really no good retest, and price rallies super violently away from my 9D EMA, I will be taking profits because I know and understand there is a very large chance that price is going to retrace back into the moving average or consolidate and allow the moving average to catch up. As an options trader, I don't want to stick around for either. So if there's a very large violent move away from the moving average, I always take profit and I'll look to get back in the trade. Also, you can notice here, these trends are disrespecting the EMA cloud, right? So anytime price really isn't respecting my EMA cloud, there's no way I'm trading. There's just no way. These aren't trends that continue in my favor. These aren't trends These trends we can expect to deceive us, to remain choppy, and they're extremely unpredictable. These are not trends you want to be a part of, so therefore I sit on my hands and wait. This makes trading so much easier, guys. Like in my past, 90% of my losing trades came from forcing setups in these market conditions. So now that you have the knowledge of what a healthy and unhealthy trend looks like, it's going to be very simple for you to sit back and go, I want nothing to do with this. I'm sitting on my hands, right? You're going to watch other traders get in, get out, get smoked, and feel bad about themselves, and you're just going to sit back and be like, hey, there's nothing appealing to me here, because I know and understand through research, through data collection, that these trends have a low probability of continuing, right? They're choppy. How do we know this? Through extensions, right? And guys, dead serious. Look at this trend here. Healthy trend. It's literally selling off over almost $4, continuing. So price has nothing to do with it, or dollar amount has nothing to do with it. Meaning, it's sold off $2, it has to reverse. No, it doesn't. It can continue. I've seen trades go on in healthy trends for over $10, $12 on the S&P. Right? So do not allow your mind to deceive you and tell you, oh, trend has already moved $2, it's got to reverse. No, ask yourself, what type of trend is it? Is it healthy? If so, you can pretty much guarantee it's going to continue. There's a very large chance, over 80%, that healthy trends continue in the dominant direction. And then unhealthy trends are going to remain choppy and unpredictable. All right, so it's so crazy because, hold on one second. When I was making this slideshow, right, in this mini course right here, this was the day. This was price action that day while I was making this. And it was so funny because this is such a good example, right? And just so everybody knows, today is 1/4/2025. So this, I believe this was like 12/29, right before the end of the right before the beginning of the new year. So before us is live price action, and you're going to notice something here. Look at the morning market price action. Garbage. How do we know it was garbage? Look at how extended we were getting here. Hold on. From price, right? Look at you guys gotta understand this. Look at the moving average. Look at the violent move where it leaves us $1 away from the 9D EMA, right? So when I see that we're $1 away from the 9D EMA, there's no way I'm entering short. It's impossible or long. There's no way, because there's such a high chance of the snapback back into the moving average. And unless I can afford that snapback, meaning I can attain the risk for it, there's no way I'm either staying in the trade or getting in the trade. So therefore, I'm patient. It's unnecessary. It doesn't even make sense remotely, logically, rationally, in my mind, for me to enter short when we're that far away from the moving average. And that's where we need to get you. We need to get you guys thinking the same exact way. When you are that far away from a moving average, there's no way I'm entering a trade. Therefore, I'm remaining patient. Then we snap back into open print. Buyers couldn't hold above open print, but once again, we're getting these violent sells that are leaving us extended. So I stay away from trading until price smooths out and we get the green bar right here that was ignored. At that point, I'm short. Why? Look at the moving average, the 9D EMA. We are hugging price. So when I get a green bar ignored off a critical level, I enter short, stop above the green bar, capturing a beautiful move down into EOD and previous day open print. And then we ended up taking another short play right here off end of day, because the healthy moving average relationship, right? We're not extended. Went short, caught a beautiful move, right? So once again, I need you guys to understand this concept. If you can understand it, your trading will change, right? So how do they serve us? They help us avoid bad setups. They help us identify healthy setups, right? Stay away from the bad, trade the good. and then they help us hold trades longer, right? Because once again, if you could understand what a healthy trend looks like, there's no reason to get out of it. Healthy trends continue in the dominant direction. So once again, don't leave it to chance. Learn to use that tool and build that house of consistency, right? So lesson takeaways. There was a lot of information in this, and I just kind of want to sum it up for you guys so that you could retain it and move forward. And I highly suggest that you guys write this down, right? He who writes it down will retain the knowledge. He who doesn't will forget it. So lesson takeaways. Moving averages are a tool that keeps you grounded in the present moment, right? Once again, remember that first slide, we were talking about remaining objective instead of subjective. Objectivity means you are reacting to price. Subjectivity means you're trying to predict it. There's two differences. Do not be the subjective trader, right? Number two, it's a tool that keeps you away from chasing bad setups, right? Becoming a day trader is all about defense, right? Offense, yeah, but until you get the defense locked down, you're going to be forcing bad setups. Bad setups cost you money, right? Once again, it's not a discipline problem. It's an awareness problem. You guys are now aware of the proper principles and precepts that underline moving averages. So now you can utilize these principles, right? What are these principles? The healthy trend and the unhealthy trend, right? You learn to identify what healthiness is and unhealthiness is. You will always have a massive edge in the market. So I hope you guys enjoyed this lesson. Moving averages have changed my life. Do not be the trader that does not utilize this tool properly. Be the trader that is familiar with moving averages and understands the opportunities that they present to you. Hope you guys enjoyed this lesson. Click the links below, and I'll see you in the next.